Welcome back, and joining me with more insight on the day's trade is Anthea Gardner from Cartisian Capital. Thank you so much for your time, Anthea. Of course, a lot of things that the markets have been focusing on recently, Budget 3.0 and also the meeting between Donald Trump and Cyril Ramaphosa. And actually, even during that engagement, I was looking at the market, particularly the Rand, and even today, it seemed kind of stable, still below that 18 Rand level against the US dollar. I don't know, would you say that the markets are kind of still comfortable and still confident in South Africa remaining on track at this point?
Hi, Zanati. I actually think the market is more comfortable now than they were 24, 48 hours ago. So you did see the Rand weaken a bit, and I think the headlines that came out initially last night weren't great. But then when people started looking into it further, and we realized that the talks actually weren't that bad, and you know, Ramaphosa handled Trump very well.
Yeah.
He was spoiling for a fight, and he didn't get one.
Yeah.
And that's all that we needed, really. And also he brought up AGOA, and so Trump said, well, he'll relook that. And so all of those things really, in my mind, were positive. And so it was never going to be a great conversation or meeting. The Rand blew out a little bit, but then it's come back below 18 again. And so what has happened, though, is that the bonds have blown out. But I don't think it's because of that meeting. It's US yields that have blown out. I think there's a real concern around US debt at the moment, and global growth, and particularly, funnily enough, for a change, developed markets global growth as opposed to emerging markets global growth. But the problem is we still follow the US, and so when US yields blow out, ours did a little bit as well today, which wasn't fun.
Yeah, something that I noticed with South Africans, I mean, a lot of us were frustrated in the beginning with Cyril Ramaphosa's diplomatic responses, but really, I guess that works out for everybody. As you said, Donald Trump is maybe looking for a fight, and I realized that actually a lot of us in South Africa are what you call in Xhosa, Phuma Silwe people, get out and fight. But Cyril Ramaphosa is more diplomatic than the rest of us. Well, let's take a look at some of the company results that came out of the JSE. Starting off with Investec, coming out with a year-end results. We did see that revenue growth outpacing cost growth, also posting record pre-provision adjusted operating profit, as share climbing about 2%. A bankable performance?
Bankable, yes. So it really is all about dividends and share buybacks today. All the companies that reported had something to say. So Investec, I would say definitely good. Their prospects are good. They really want to grow the business in the UK. And I think they've got the potential too, especially in their wealth and client-focused business. And they said they were going to spend, and the number escapes me now, how much they were going to spend in growing that client business. Maybe it'll come back to me.
Yeah.
But great return on equity. It was slightly down to 13.9% from 14.6%. Still well within the target range. Their target range is 13 to 17, and they did say they were keen, that they think that next year it's going to be 14%. So we're okay. HEPS was down as well slightly, but as I said, it's all about the dividends and record final dividend for the third year, 36.5 pence per share, and proposing a share buyback program, 2.5 billion rand. So it's not all rosy, and so things are slightly down, but clearly this is, as you say, a bankable cash cow produce as well.
All right. Well, let's take a look at Life Healthcare. As you talk about dividends, of course, investors can expect another maybe special dividend from the sale of the Life Molecular imaging business that they are selling. They did come out with interim results, top line growth of over 8%, also momentum filtering through to that bottom line. Would you say that this was a healthy set of numbers?
Yeah, definitely. I think Life Healthcare has had lots of headwinds, and I heard the CEO speak earlier today, and he was talking about infrastructure and weather and floods and how it affects their business. But they managed revenue up 8.1%, normalized earnings also up 9%, declared an interim dividend of 21 cents per share. And as you said, when they sell their imaging business, which, by the way, I thought was a great business, it's kind of disappointing almost that they're selling, but we can expect another nice little dividend. So really, yeah, nice, a decent set of results. You know, they spoke quite a bit about benefiting from the network arrangements, what is it, PPD, paid patient days,
yes.
was up slightly, and that's always good. And occupancy was up as well. So those things are good. That's what you're looking for in hospital businesses. Also, planning to spend quite a bit of money on capital expenditure. And when he was asked, Wharton Hood was asked if he was going to build another hospital, he actually said, well, you'll remember that we haven't built a new hospital in 10 years. And I thought,
Wow.
oh, that's true. Like, isn't that crazy? And so
Wow.
the capital expenditure that they're planning of, it's about over 2 billion rand,
Yeah.
is going to be carefully spent, I think were his words, kind of those were to rephrase him.
All right. Well, where are you finding opportunity today? Your stock pick, Anthea.
Yeah, so I'm going with IOCO. The share code is IOC. This is well, I think it's a great turnaround story. I hope it's a great turnaround story. This was formerly EOH, and you know the big corruption stories. In fact, the corruption cases are still ongoing, but they've had Stephen Collar or Van Collar come in and turn the business around. The investors look like they like the new guy, the new CEO. Reese Summerton, I think his name is now. I keep forgetting.
Yeah.
Something's going on here today. But you know, so it's a turnaround story. They've cleaned up their image. They've got a new CEO. EBITDA margins are improving. They've turned the corner on profitability. It's a growth story with good infrastructure in place. And so now it's trading. I forgot where, 3 rand something. And I think it's easily a 6 rand share in the next year.
Okay. Okay. Well, I'm sure some Stock Watch viewers will be happy to hear that, because some have been wondering if it will ever even go back to above 4 rand. So thank you so much for those insights, Anthea. Really, really appreciate it. That was Anthea Gardner from Cartisian Capital.